Hi, everyone. Welcome to another episode of the SportsTech Allstars podcast. We're continuing our series speaking to top investors or, let's say, advisors in the financial space around sports tech investment. We've got on this episode Mohit Pareek, who is a principal at DrakeStar Partners, one of the leading transaction advisory services in the world around sports and sports technology. They produce some amazing content, especially reports around the topic. So if you enjoy our VC report, if you haven't downloaded it yet, please do. If you enjoyed that, definitely go check out that report as well. Over the episode, we discuss what Mohit believes are some really interesting trends on sports tech, why there has been a glut of M&A activity over the last couple of years, which is some interesting analysis that you should hear. And then, of course, the big opportunities that he sees going forward that I always enjoy with somebody I know for a while. Hope you enjoy it too. All right, Sarji, as I call him, Mohit Pareek is on the episode today. Mohit is somebody that I've known for a while. Welcome to the show.
Thank you, Rohan. Thanks for having me here.
A principal at DrakeStar, a name that people who've been following the sports tech reports market, let's say, will know well. You guys create some amazing content coming from a report creator. I will definitely highlight that yours is another report that I look out for every quarter, also half year, and you guys do it much more, maybe have access to better resources and more resources than us at Sports Tech X, and put out some amazing quality content talking about what is happening in the sports tech market. So as we just published our VC report, I definitely wanted to talk to you and get your perspective on what is happening in the market. But before we do that, Mohit, I always want to know a bit about the person. I know a bit about you, but I want our audience to know a bit about you, your background, what brought you into this role as a principal at a pretty major transaction services company, and then actually get into DrakeStar, and we go from there.
Yeah, no, absolutely. And thank you again for inviting me here. As we know each other for quite some time, I think we might get into some casualness here, but I would try to keep it more informative for our audience. But I think just generally talking about myself, I think my life has been, a bit of a go with the flow for a major part of it very early on. My MBA in India, and then started working with some advisory firms out there, which was not my first choice, but I somehow ended up at one of these advisory firms, and I think I just felt in love with the whole profession. So since then, I've never looked back. Have been in this advisory industry for over 15 years, and gradually, as try to move forward and get up in the hierarchy, you start to specialize to some of the verticals that you resonate better with, or you like generally, or you just feel more comfortable. And for me, sports, gaming, and overall media is just one industry that I just love. I'm a big sports fanatic. I love all kinds of media. And then gaming obviously has become a key media industry. So I think it just feels like, me just following my passion every day. So I am currently a principal at DrakeStar, and DrakeStar is a global tech bank. So we are a global middle market advisory firm that only does technology and digital media transactions, 8 offices across 6 countries with New York as our headquarters. I'm here in Los Angeles office with few other people. And then, we have offices across Europe, including London, Paris, Munich, Berlin, and Geneva. So very strong presence in the US and European markets. And then we kind of also do some Asia-focused transactions, but you can say we are primarily a cross-border tech bank that executes transactions in technology. Roughly 25, 30 large, senior bankers who are focusing on their own verticals within technology. And I, along with a couple of other people, are more focused on media, and I focus on sports, gaming, and overall media as my vertical, where I spend 100% of my time. It's always good to hear good stuff about some of the things that we produce, which are more of a passion project, as our key work is obviously M&A transactions advisory. So really appreciate you guys who obviously produce one of the top reports in the market to really hear some good stuff about some of the stuff we currently see in the market and try to put that in some, flashy PowerPoints.
Yeah, that's true. And that's important to inform the market. We were just talking before we started about how, as sports is growing and therefore sports tech is growing, such a dynamic space. So, to bring the level of information to a baseline that everybody can get on the same page with, that is essentially the role that your content, our content kind of allows. And then, top of that, you build whatever else that you're trying to sell, whether it's transaction services, advisory, looking for deal flow, whatever it is. But that baseline of information is really important. So I think the fact that y'all are in the market and do such an incredible job is really valuable to us. And I think fits really nicely. To set the context for somebody just a bit better on DrakeStar, can you highlight a couple of transactions in the recent, I don't know, couple of year or 2 years that you've been a part of?
Yeah, no, absolutely. I mean, I love talking about some of the stuff and deals we have done. So more importantly, I'll keep it more focused on sports technology and sports and media as a vertical, as that is most relevant for our viewer here. So one of the latest ones is Spideo. So Spideo is a performance analytics firm, based out of Sweden. We just raised a growth financing for them. It's a high tech AI focused performance analytics platform that is actually growing very very fast. And we just had a growth financing round for them. We're CPO partners out of Germany. They led the round, and a few investors followed up as well. One of the other larger deals we have done in the sports vertical is FileMocha that we sold to Backlight, which is a platform created by PSG, Providence Strategic Growth, one of the top, private equity firms out here in the US. They're based in Boston. And FileMocha was one of the anchor transactions for them to actually go and tell to the world that they have, created this platform. So they combined 4 or 5 media and sports focused properties and businesses and brought them together to create this B2B enterprise tech platform that focuses on content creation and distribution. And while Mocha is known for its hyper distribution of content tools, and it's a key part of their process, as I'm sure we'll talk about a lot more about fan engagement and few other things. But hyper distribution of content for linear and streaming providers was the key thing that while Mocha provided,
Mm-hmm.
it is a large transaction. And I think the CTO that we had for while Mocha is now the CTO for Backlight. So that just tells you how transformative that deal is for the overall platform. Another key transaction in the media sports industry that is again very focused on high-tech AI space was SpikeTrap that we sold to Reddit, the biggest social media platform. SpikeTrap is known for this contextual AI platform. So they kind of work with a lot of sports and media companies in, creating sentiment analysis, audience segmentation, audience tracking through AI. And they have a huge team that focuses on, artificial intelligence, machine learning, and just, overall natural language processing as the key thesis behind it. And this was a very powerful platform. And at that point, Reddit obviously was eyeing for an IPO the next year, and they were trying to beef up their overall tech stack and what they provide to their customers, which is primarily the advertising companies. Trap kind of felt right in the middle of their whole scheme of things. So this was another key transactions where, investors kind of expanded on their capital. Our founders found a really good, strategic partner in Reddit, and now obviously they're all working at Reddit and at key positions. So again, a landmark transaction primarily into the AI space. So I would say probably sold an AI company 1 or 2 years too soon. But I'm glad that we were able to execute that. Other than that, a lot of other transactions into the sports, media, and gaming adjacent spaces, Lightstream to Tech was one of these transactions where it's a live streaming platform for UGC content. Then we sold Actra to Zynga Take-Two. So this was more into the PC console gaming,
Mm-hmm.
small gaming veterans like Max Schaefer, who created Torchlight, Diablo. This was the same team. And Zynga at that point was looking for cross-platform capabilities. And this kind of, again, fit right into their puzzle. So I think just looking at some of the transactions DrakeStar has done and personally I've been involved with, these are, kind of landmark transformative deals that we are able to execute given our strong distribution and just reach into the market, and very excited about what's coming for us in 2025 and 2026 and beyond.
And that's what we're going to come to. First of all, just on those transactions, I mean, you've rattled off a series of big names over there. So anybody who's trying to get their company acquired or looking to acquire somebody themselves, clearly you are the guys to speak to. But note that there are levels here to this game. So before you get into DrakeStar, make sure your P&L is at there are enough zeros in the P&L in a good way, shall we say. But yeah, thanks for sharing all of that context, Mohit, about yourself and about DrakeStar. And I want to segue right into exactly what you mentioned about what's coming up over the next 12, 18 months in sports tech and beyond, because it's such an exciting time. But before I go there, I also want to look at the immediately preceding 12 months or so. 2024 was an interesting year from a sports tech perspective. I mean, it was dry for a long time. And then there was a lot of deal flow. Let's say the year started a bit slow and then the year started a bit slow and then we really picked up. From your perspective, what was really hot? Because we also know that, I mean, we talk about equity versus M&A, and this is a conversation that you actually kind of highlighted in the market first because of your M&A background. Walk us through from your perspective how you saw 2024, the sports tech transaction space.
Right. I think 2024 has been, a kind of bridging year between, the post-COVID slower sentiments to now trying to just really pick up the business activity and just the business cycle kind of transforming and becoming more of a disruptor year. I think pre-2024, 2023 was again, a little bit of a lethargic year where, there were deals happening, M&A was good, but at the same time, financing market really had very low self-confidence when it comes to, mid to late stage deals. Early stage financings were continuing to happen, but, those are smaller check sizes. You're investing in a wide portfolio of diversified businesses. VCs are generally a little bit more comfortable and they're trying to, kind of put more money into the innovation that's coming in next few years. But 2024 has been slightly, a different kind of a year where it started a little bit slower on the financing side. But I'll tell you, sports is the industry where you want to be in 2024 or beyond, because it's a red hot sector. I think if you talk about the whole tech ecosystem or any other industry, sports is a vertical where you see the maximum amount of activity, whether it comes to, striking those media streaming rights, talking about team deals, talking about large financings for some of these bigger platforms, and then some of these transformative M&A deals, when you talk about Endeavor, Silver Lake, or Endeavor selling some of the recent assets, I think this is the market where you want to be. So from an M&A standpoint, 2024 has been again another record year for M&A, but the financing market has taken a little bit of a longer time to really bring that curve back up. So early this year, I think we didn't see a lot of deals happening, but now things are starting to move. As you see, Cosm raising a big round, EGM raising a bigger round. So I think things starting to look better as the valuation kind of convergence is happening between what the founders are looking for, and now the VCs are more open to investing in high growth companies at those valuations. So 2024, which started slow, is now looking like a very good year, while financings are still, a little bit of a challenging prospect for a lot of these bigger companies who have raised at a really strong valuation before. And now the business KPIs and the valuation expectation from some of these, money providers have come down. That's how I see 2024. But from an M&A standpoint, I think for the full year, we're probably looking at over 50 billion in M&A activity.
Wow, it's a beautiful number to cross. In fact, where you started, it's kind of this in-between year, the transition year you said, and that's how we call it as well. I mean, every year we kind of give a tagline. In 2023, we called it the year of consolidation because there was such a glut of M&A activity, which we hadn't seen coming out of 21 and 22, where it was exactly what you were talking about. The equity markets were hot. Valuations were soaring. Founders were having a great time. 2023, we saw this consolidation. In 24, in fact, we use this as the title for the About the Report section, is the transition year. In sports, you call it, the team is being well, we'd like to believe so. But the team is in a sport, to use a sports analogy, the team is in a transition. You're not fitting the pieces right, but results are good, but then also bad. You have one up and then one down, and it's kind of going, but you can see hopefully it coming together on the other side. And I think that's what we're all optimistic about. From my perspective, it's interesting to hear from you an advisory services company that goes across sectors saying that sports is the place to be. Can you maybe spend some time on that? Like, how much attention is it getting within your organization?
Yeah, I think thank you for bringing this up. And I am proud to say that we are perhaps one of the only advisory firms that considers sports tech as a key vertical for us when it comes to our practice. So I think from my standpoint, I'm currently a principal, so you can kind of tell me I'm somewhere in the middle of the big guys versus the bullpen guys. But we do have some of the other folks, like our CEO Greg Bedrosian. He he and I we collaborate on pretty much all the sports tech activity we do from here. Then coming to our European offices, we have Julian Riddlebauer in our Berlin office, who just joined DrakeStar last year and is doing some amazing work. He's also focusing on sports technology as a key vertical. And there is a team behind all this that creates the whole deal mechanism, and then we execute deals for our clients. So we are a big proponent, and we are trying to build a lot more into sports tech, help some of these, innovative technology companies to really achieve what they want to achieve, whether it's in the form of raising a large round to grow and conquer the world, or try to find a bigger strategic partner that can actually make their growth look even more attractive with bigger distribution, better capital, and better resources.
It's
So,
great to hear
yeah,
that. Yeah, that you're dedicating your large bank, tech bank, as you said, and dedicating. I mean, you're talking about the CEO and you're talking about some key positions who are keeping an eye on the sector. That's very encouraging for the sector to hear. You mentioned something there at the end, and also in an earlier answer about the difference between large deals and advisory, kind of the M&A, the consolidation piece. But also we see this, let's say, U kind of effect, where there's a high volume of early stage transactions and a decent volume of late stage transactions. The horses that you bet on, you want to keep backing, right? And really drag them across the line if they can't go themselves. But it's this middle that we don't see enough transaction services or transactions around. At least that's from our perspective. I'm fairly certain you must be seeing the same thing, no?
Yeah, no, I think you bring a very good question. And, this is the market where we operate. We are more into the middle market segment. So we are not always transacting on $1 billion space. So we are operating more into the middle market segment. And that's anywhere from, a 30, $50 million enterprise value all the way to 500 million. But I think you bring a very valid point. And I would like to actually tell you that the mid segment, where there are these companies that are just ready to launch their next phase of growth. I think those deals are continue to actually grow. So while we talk about these big numbers, Endeavor 13 billion transaction, then Belly's 3.5 billion transaction, all these different verticals, and then large deals, but the middle market is actually getting the maximum amount of activity now. So these are the deals which do not get disclosed in terms of the deal value because of competitive dynamics, or some other ways where people are not really trying to tell you, so that people can actually get a lot more insight. So there are competitive reasons for people to not tell you the deal values, but those deals are actually becoming increasingly important and growing in numbers. So if I talk about the M&A curve, I'll just take help of our report in that sense. If you talk about just the first half or 3 quarters of this year, which is the available data points we have, I think we are looking at deals in 100 plus deals each quarter range.
Mm-hmm.
And I don't think there is any other industry other than maybe enterprise software, which is obviously the key vertical in the whole tech space, where you see this much amount of activity. And when we talk about these large transformative deals, those are few, like 5 or 10, and the rest of these M&A activity is actually supported through these smaller and mid-sized companies who are getting sold for multiple reasons, as I said. And some of those can be, the financing market is very challenging. So I think
Yeah.
for them, the other way to actually go and continue doing what they're doing is just find another bigger player who's willing to help support their growth journey.
Yeah. And
Is the number of mid-sized deals here.
that's really interesting to hear, especially the fact that you you're saying that the deal value is not disclosed. So sometimes you don't even really know how big the company is that is being acquired, because that information, these are not publicly listed companies, or unless you have, I don't know, a really good investor Rolodex contact list, and you can call up somebody and find out from somebody on the cap table, you really don't know the financial position of a company. So when they get acquired, you think, these are nondescript maybe, but they're also 7, 8 figure revenue often, and maybe even larger sometimes. So it's interesting to hear from your perspective that you see a high volume or a good volume of these type of transactions. The last part that you said, maybe I would just want to ask your perspective on that as well. You mentioned already that maybe the founder is not always selling from a position of strength. Yeah, because they're in a challenging market. They're not able to get the liquidity that they need to drive their growth. Have you seen this trend of founders needing to correct certainly their valuation expectations, but also clean up their P&L? Like they can't be running into huge negative EBITDAs. They have to get some sort of net cash flow, not burning too much cash, so we say. That usually has a positive effect on helping them raise, but I'm sure it has a positive effect on helping them get acquired as well. So just it makes more sense for founders to think that way. You've seen that kind of behavior change?
Yeah, it looks like you're suitable for an investment banking job. I think that has been a key theme for the last 2 years. So while we talk about these high growth businesses that continue to grow very high, but from an M&A standpoint, and then when the markets start to get tough, this is where you need to course correct and try to get to a position where you are self-sustainable, but at the same time, if you're trying to execute an M&A strategy, I think for the last 2 years, cash is king. I think companies are, for the last 2 years, being sold more on EBITDA than your growth. There is a direct correlation. If you're growing and if you're profitable, you are obviously going to get a lot of bids in the market. But for you to actually go and find the right strategic partner, I think all the bigger businesses, whether it's some of the larger traded businesses, or some of these private equity backed businesses that are looking for more platform tuck-in acquisitions, they all are considering deals which are accretive to their EBITDA profile.
Mm-hmm.
So it becomes a much easier conversation and much more, expanding shareholder value conversation when you're profitable and you can actually continue growing. So for businesses that could not raise a large chunk of capital because the valuation expectations didn't match, or their KPIs didn't support what they were asking for, I think the right way to think for some of these founders was, hey, how do I get to profitability as quickly as possible without hampering too much of growth, which is easier said than done. But at the same time, I think for the last 2 years, for these smaller scale businesses, I think profitability is key for someone to actually notice you. Because as a buyer, while I already have a huge pressure from stock market, where my valuation multiple has come down so much
Mm-hmm.
because of global reasons, geopolitical, inflation, blah blah blah. I think for them to really get noticed and get acquired with the strategic, so they can continue executing what they're doing, it's important to make it accretive. If I see a business that's going to need another 5 million to actually become profitable, it becomes a very, very difficult task for me to go and sell that business, unless it's an open AI business, right?
Yeah.
Which I
Or
think doesn't need selling.
sure, exactly. But or their tech is that strong, or their patents are that strong, or they really have some core IP. But it's almost like your PNL is part of your IP. You have to really think of it that way, that this is an important point in any sort of, let's say, sale or investment raising transactions. We're in early stage VC with Match Ventures. So that's what we keep saying to founders as well. Like forget the valuations. Those are not rock bottom, but they're near there. Like your
Yeah, Matt,
expectations.
there's some interesting businesses. Curve is an amazing business.
Yeah.
Mobi is a good business, although small. I think they're scaling.
Scaling pretty fast as well. Yeah, we found some interesting deals. Yeah, thank you for highlighting some of our companies as well. Speaking of interesting companies, first, rather than the companies itself, I want to ask you, what are the sectors, what are the areas within the sports tech industry that you are most excited by?
I mean, I think I kind of resonate very well with some of the industry segmentation that you guys have done. And I think although we were thinking very similarly, but I think that's a very clear segmentation saying there's a fan side, there is an athlete side, and there's a management side of things. And for me, as someone who's looking to do some, landmark transformative deals in the space, small or mid-sized to large deals, I think all three are equally important. But at the same time, some of the things that are key themes in the market is very, very exciting for me personally too. So fan engagement as a vertical, I think I'm very passionate about, and I want to see a lot more innovation to really bring that fan engagement. And then again, on the athlete side, I think these are superhumans who are producing that kind of, performance on field day in and day out. I think the more you help them, it elevates the whole performance, the whole game, and then overall it just becomes very, very interesting and good for the whole ecosystem. So analytics, AI, fan engagement, I mean, all these are kind of big key buzzwords, but I would say things that kind of innovate the whole process from you engaging your audience, whether it's, finding a ticket for an event all the way to going to that event. And then after you consume, the event, you come back with that experience. You and I as a sports fan, I'm sure we keep watching those, replays, we keep going back to highlights. But how do you keep that, fan engaged post event? And then how do you create that whole ecosystem that does not just look good on Instagram, but also can create a lot of monetization? I think this whole ecosystem of these events coming together is really interesting and exciting. And there's a lot of innovation going into that. I mean, we talk about, you know, all the Swifties and Beyonce fans kind of bashing on Ticketmaster. So there's a lot more innovation that can happen in that space. Then you talk about, you know, Instagram is perhaps, one of the biggest sports platform when it comes to UGC content, but there are a few more that are coming up. Sleeper is another one. I just talked to someone, I'm forgetting the name. They have a very good platform they're building for UGC content in sports. So all these are also very interesting, where you kind of create that ecosystem. Then you can explore all that audience and the analytics with it for different purposes. Betting is growing very aggressively. US markets are opening up. And I think all this can create a lot of value for everyone. And more value, more innovation just elevates the whole, experience for a fan. And me as a fan, I'm very excited about all that.
I think if I can put it slightly differently, but I completely agree with what you're saying. If you put the fan at the center of it and you put delivering that fan a really high quality experience in whichever area, it's commerce, merchandise, ticketing, engagement, whatever. If you deliver a high quality experience, then you can build good monetization models around it, because you're delivering quality, the fan is willing to pay for it. If you just try to just create, I don't know, another social network or another, why are they coming here? What are they getting back? Then can I charge them for it is almost the last one. So putting the fan at the center is one thing that we talk about a lot. And yeah, such an exciting time. We could go on and on about talking
Right.
in various areas.
Is 250 million, right?
Incredible.
They're creating experiences that I think are top notch.
And genuinely more like super, I would have never thought of that. Right. I mean, it's something that you see it and you go like, wow, that is genuinely innovative and interesting tech. So yeah, fair play to them, and hope more companies can do that. But that's one of those they really need. It's capital intensive. They need, the tech capability to deliver something, but they need the investors to really believe into what they're trying to deliver. Fantastic. All right, Mohit, we've motored through, of course, as we said at the start, we could probably finish not this podcast, another one, and probably another one, and keep going. But we will try. I'll try to bring this home. I want to first talk about what's happening with DrakeStar. What are you guys coming up for the next 12, 18 months? Of course, more content, more transactions, but anything special on the horizon?
No, I think we are working on some of very interesting deals in the space where we're trying to do these deals. So hopefully you will hear a lot more of those being, announced very soon. I think, we are towards the end of the year. So tail end of the year is always very stressful. We are trying to execute few deals, get ready with few deals for next year. So I think it's a very, very interesting time for us as we are approaching the holidays. As people say, bankers never sleep, and you can say it's more or less true. But at the same time, I think this is a very interesting phase of our year where we are kind of really honing on finishing up work that we already had started in 24, some interesting and exciting deals that we will bring to the market in 2025. And I'm also very excited about some of the new breed of, these sports tech businesses that I will get to talk and also hopefully help them achieve to some of those, corporate finance things that they want to do.
Well, I will certainly be keeping an eye out for all these announcements and to put it through all our channels. And I hope you do get some time to sleep eventually and some time with family and all that, because we all know how important all of that is. Mohit, thank you so much for taking the time to speak with us. If somebody wants to reach out to you, what is the best place to do that? Your email or your LinkedIn?
Yeah, I'm very approachable on LinkedIn as well as on my email. So my first name dot last name at DrakeStar.com is the email to reach out to me. And LinkedIn, I'm sure you can easily find me, as there are not too many Mohit Pareeks out there.
We will put the links to all those links in the show notes. All right, Mohit, before you leave, my last question to ask you is where I always end my podcast. I always want to know from my guest what has been their favorite sporting moment.
Yeah, gosh, there's so many. I'm such a sports fanatic. My wife always says, every second you're watching some other sport, so you develop new hobbies and habits. But as kind of we come from our motherland, India, cricket is obviously very close to at least me as of now, even though I've been here for quite some time in the US. So I think the India winning the ODI World Cup was actually one of the key highlights where I really felt emotional. I never get emotional, especially on the
It
sports
was.
front. But MSD hitting that six, and then I think the more emotional part was just some of these youngsters.
Exactly. And that's one of the reasons that I asked that question, because A, it always leaves everybody with a smile, because to remember those incredible moments when you felt something positive is great. You're talking about 2011 World Cup? I mean, I remember when the second wicket fell, we just all hit the bar. I think India was 40 for 2 or something when Sachin got out, and then Gambhir and Kohli were saying, "Oh, come on, this is done. Let's get some." And you come back, and they're just still going and still going. And by the end, when Dhoni smashes it over long on, we got to go full to cricket for our audience. Sorry, but I hope you understood that much. When Dhoni smashes it out of the park, we're all just celebrating, nothing. I was watching it in a big space with a bunch of my friends. But I especially like talking about that moment, which is an incredible moment for me as a fan to be a part of. But I've also been able to have on this podcast the coach who was there in the dugout, who got us that trophy. So Gary Kirsten has been a guest on this podcast. So I've got to ask him a few questions and recall that moment as well. So that's one of the pleasures that we have, of the joys of working in this industry. And yeah, never got him out. Never got him out. Broke records against India. And I started the podcast with him like that. I was like, man, I hated you while you were playing because you never got out. But then as a coach, my God, what an incredible man. Incredible man, incredible coach as well. Mohit, thank you so much for sharing your incredible insight that you have on this industry that we call home, and I think forever will. I know I don't feel like I'll ever get out of this space. Sports is such an exciting space to be in right now, and feels like it will be for a long time to come. And then to be a part of the innovation that drives its future is incredible. So thank you for sharing your insights around it, for sharing your favorite moments and all of that. Look forward to continuing our conversations and especially seeing more cool stuff from DrakeStar in the news, which we will share out through our channels. Thanks for taking the time. Look forward to it. No oversharing with it. I'm sure it was absolutely fine. DrakeStar will be very happy with the content that we've created. All right, thank you once again. Guys, that is a wrap for another episode. Real joy talking to somebody who I've known for a while, who I respect, whose opinion I value from the industry, and to share our own perspectives on why we think this space is so exciting and will continue to be so exciting for time to come. Sports is hot, going from red to possibly white in a few years. For more context, please download their report. They have some amazing content, and download our latest report, the VC report, if you haven't yet. All right, see you next week. Cheers.
Thanks for listening to the SportsTech Allstars podcast with Rohan Malhotra. If you like our show, let us know and leave a review. And if you want to know more about us, check out sportstechx.com, where you can find our latest industry reports and updates. For a deeper dive into all things sports tech, check out our comprehensive database, SportsTechDB, at sportstechdb.com. Don't forget to follow us on social media. You can find us at SportsTechX on Instagram, Twitter, LinkedIn, and Facebook. Join us next time for another insightful conversation with a leader in sports tech.